think we are in an unusual situation in the sense that we have two economies. We have the economy of the super rich and the government connected people, like, as an example, Musk or so. And that economy is doing reasonably well because we had an increase in interest rates. But the increase in interest rates was not accompanied by bear markets in financial assets. The stock market is at an all-time high. Europe has done well last year and this year. And this year we have also Asian stock markets that have done very well. So I think that some people have actually benefited from Mr. Trump and his money printing and his rhetoric. And then we have the ordinary people in countries like Europe or the US. These ordinary people, they spend a large percentage, relatively speaking, of their income on groceries and on necessities. They don't have any savings at the end of the month. In fact, they have to borrow money to make ends meet. And my view is that these people have higher salaries than they had 10 years ago, but not high or up enough in order to compensate for the cost of living increases. Say your salary goes up over 10 years by 50%, but your cost of living goes up by 100%. So in real terms, inflation adjusted, your standard of living is not going up but down. And we have a very large group of people, income-wise. They are the lower classes and the middle class and the upper middle class. They haven't kept up with the increase in the cost of living. So their standards of living is going down and they are struggling. They have no money at the end of the month. They essentially pay as they go. They wait for the salaries so they can pay off their credit card debts. So that is the economy. But I have to say, some economies have been in a decline for several years. Like you take China. The asset prices in China, real estate and stocks, have been going down. Same for Hong Kong. And now my sense is that they're bottoming out. And in the case of Hong Kong, we had big moves. I mean, we have lots of stocks. They're up 50% from the lows at the end of last year or the beginning of this year. And so when we talk about the global economy, we also have to make the distinction. Are we talking about economic activity in real terms, or are we talking about asset prices? And some asset prices are going up, and other asset prices, like an example, commercial real estate, has been going down for years. Or you take the price of coffee. It was strong until 2-3 months ago, suddenly collapsed. So my sense is that you can have interest rates going up and the stock market keeps on going up. Then you ask yourself, why is that the case? And the answer is that the level of interest rates doesn't tell you whether money is tight or not. As an example, I have a company in the financial sector and I have personal assets and so forth. And in my case, the liquidity has improved in the last 5 years because before, on my deposits and on my bank accounts, I got 0 interest rates. Now, on all the money that I have in some form of liquidity, I get 4%. Now you may say, well, 4% is not a lot of money. I agree, because I think the inflation, the cost of living increases are probably higher than 4% in the world. But this 4% now has given me a cash flow which I didn't have before. So I think that many people, they think, oh, interest rates are up, liquidity is tight. No, there's plenty of liquidity in the system. If money was tight, Bitcoins wouldn't make a new high. Gold wouldn't be making new highs. The dollar would be strong, but now is weak. In monetary inflationary times, it's difficult to calculate what is the right price. We don't know. The Dow Jones in nominal terms is at the high, but the Dow Jones expressed in euros and expressed in gold and silver is way down from the peak in November or February of this year. We look at the year 2000 or at the year 1973. The tech sector in 2000 was very elevated. We had the so-called dot-com bubble. In 73, we had a bubble in quality growth stocks. We called them the Nifty 50. These were 50 stocks like Kodak, Xerox, Polaroid, Sears. Most of them are bankrupt, but they were the favorite stocks at the time. Anyway, when they went down, they brought down the entire market, except in 73, 74 bear market, the price of gold had been adjusted upwards in 1971 when Nixon closed the gold window. And so the gold price was in an uptrend, and during the bear market of 73, 74, everything went down except gold shares and mining companies. But, like in 2000, the tech bubble burst and it brought down everything. But there's a case where the market broke down and other markets went up. That is Japan in 89. The Japanese market was a colossal bubble. It made up for more than 50% of stock market capitalization in the world. In other words, you take all the stock markets in the world, including the US, the European markets, and Japan was 50% of this whole thing. And then Japan started to go down, and I thought it would bring down everything. No, the money left Japan and went into the Nasdaq in America. So my view is, yes, money could flow out of the FANG stocks, of the Magnificent Seven stocks, of NVIDIA, the semiconductors, and Facebook and so forth. And it could flow into markets that are depressed, like Latin America or Asian markets. Singapore has been relatively strong. I don't think it's that cheap, but it's fundamentally a solid economy and it's a safe society. In other words, families, they like to be in Singapore because they don't need to worry about being mugged every day. So this is an important factor that people frequently overlook. They look at the economy, but they don't look at the convenience of living in a safe place. Hong Kong is very safe. Kuala Lumpur, very safe. Less safe are the Philippines and Indonesia, but they're still safer than Baltimore and Chicago and Los Angeles and San Francisco in the United States. Everything is safer than the US. I mentioned just a few minutes ago about the difficulty to value anything in monetary inflationary times. Because do I value it in euros? Do I value it in gold? Do I value it in silver and so forth and so on? So I can also value gold, silver, platinum against each other. Or I could say the price of wheat is very inexpensive compared to the price of gold. Or the price of oil is low compared to the price of gold, and so forth and so on. And right now, we reached 122 years low of the price of platinum relative to gold. In other words, in the last 10 years, platinum is up, say, 10% or so, but the price of gold is up much more. Now, my sense is that the platinum price could easily be manipulated by some governments or some hedge funds or by you and me. We could tell the world, you're crazy to buy gold. You should buy platinum because the supply of platinum is much smaller than the supply of gold. And if in 1970 they could squeeze the silver market, in my view, South Africa and Russia and you and me, we could squeeze the platinum market. And my view is that there was about a month ago a very important breakout point for platinum. And that platinum has huge momentum on the upside, and that within 18 months, the price of platinum will be higher than the gold price. And therefore, I think that platinum could go to $3,000 to $4,000 easily. This is a question that relates to economic development. How do you define success in economics and failure, and how do you define the society's success and failure and so forth? I mean, we could go back to the 16th, 17th century and look at the native population of America and America today, with all the progress and all the wars that happened in between, the Civil War and the independence wars and so forth. And then we could say, has society and the economy become better? Yes, for sure. But you go to an Indian chieftain, a native chieftain, and you ask him, is your life and the life of your tribe better or worse than it was 300 years ago? I think he might have a different view than you and I. And I have to say, nowadays, society has moved into a money game. Everything centers around money. We've monetized the world. And if we talk about geopolitics and economics, I think that the great asset inflation we have experienced after 1980-81, when interest rates started to go down and we had disinflation and so forth, the opening of the world, in other words, countries like China, Vietnam, Russia, the former Soviet Union, adopting the capitalistic system and the market economy. All these trends, they've been in place for a long time, and I think we are at very important turning points. I don't think that the asset inflation will continue. I think asset prices will go down. But as I said earlier, how do we measure prices? I can say the asset price, say real estate in the US, will go down in euro terms, will go down in gold terms, will go down in Bitcoin terms, but it may go up in nominal terms in the US. All you need is someone like Trump who is willing to print money. As I said, he's a gift to mankind who own precious metals. I want to tell you something, because I have a lot to do with investors and so forth. Of all my readers, maybe maximum 3% have an asset allocation in precious metals that is more than 3%. Most people, they said, oh, the price has to come down, then I buy. No, they're not going to buy. When it comes down, they will say the bull market is over and so forth. This bull market in gold and other metals has been accompanied by a lack of speculation. Very little speculation compared to the meme stocks and to all kinds of financial products.